Hi everyone, thanks for checking in. It's Adam here at Low & Co again, and today we're looking at the Wellington real estate data, analysing the market for the month of June 2026, comparing it to the last couple of years and seeing what the trends are. So in summary folks, look, the country overall has suffered a hard few months. Wellington is no exception. Arguably Wellington has suffered a harder 3 months, and so values are now at new lows since the peak in late 2021. So overall the message to sellers is that values are softened and sales volumes have also softened. So values and sale volumes are down over the last few months. Message to buyers, of course, is, well, that's just nothing but great news. You have fantastic choice and amazing negotiating power at the moment. So, of course, good news story for some, bad news story for others. Two sides of the same coin. But let's get into the detail. So median sale price, 750,000 in June 2026 versus exactly 750,000 a year ago as well. So clearly no change. If you look at that red 6-month moving average there, you can see quite clearly the major correction is well behind us. But in the last couple of years, even 2.5 years, that red line has ever so slowly, gradually, but reasonably consistently, slowly been trending downwards. So whilst the major correction is definitely well behind us, weakness has remained in Wellington over the last 2 to 3 years, and in the last 3 months you can see that line is just tailing off downwards a little bit. If you follow these videos regularly, you know I don't particularly like median sale price because it reflects not just underlying values but also the mix of properties sold. The best guide to underlying values, which of course is what's most pertinent to us, is the Real Estate Institute House Price Index. So let's have a look at that now. So here's what I call the league tables, and the far right column there you can see from the peak. So since the peak, Wellington has fallen the furthest. It's been that way basically since then. Since late 2021, Wellington has suffered more than any other market in the country. So now down by just over 29% since the peak. Auckland not all that far behind us at almost 25%, and almost 17% for the nation overall. So in fact, if we look back at when was the last time Wellington was at the current levels in terms of underlying values, we have to go back to about March 2020 to see values at the current levels for Wellington region, which of course includes Kapiti and the Hutt Valleys and so on. And for the city itself, meaning Tawa to Seatoun, we have to go back all the way back to November 2019, so to current levels. So what that basically means is that property is now worth in Wellington City about the same as it was worth back in November 2019 in Wellington City. So that's quite some way back. So that is before any of the post-COVID kind of mad gains that we saw. So all of that has been undone and a little bit more, in fact. So yeah, down 29% in Wellington region, and if we looked at Wellington City alone, we're actually down 30.1%. So that is, no question about it, a big drop. Over the last year, Wellington also has suffered more than any other region at 4.5% down versus 3% down for Auckland. Interesting that over the last year, the story nationwide is still a drop, but only a small one at 0.8%. Over the last 3 months, Wellington and Auckland have again fallen further than any other part of the country. So certainly the trend, the overall theme we're seeing is cities are faring worse than the provinces, than the regions, if you like, and the North Island is suffering more than the South Island. So in the provinces and in the South Island, they're doing far, far better than the cities and the North Island generally. So if we look here at the graph, you can see there that, look, things were actually showing positive signs, showing general improving trends there. If you look at the orange line in the house price index graph here for Wellington region, you can see that we were on an upward trajectory. And then the last 3 months, it has absolutely fallen off a cliff. Now, is the timing of that being 3 months following the the Middle East conflict, the geopolitical tension over in the Middle East, is that coincidental? I suspect not. It's fairly dramatic. We were clearly on an improving path, and then from after March, it absolutely has just fallen off a cliff. And so, if you look at the drop in the last 3 months, there you can see we have to go all the way back to January 2023 to see a 3-month drop of that magnitude in Wellington region. Wellington City, you can see there that it's more of a sawtooth. It's higher highs, it's deeper lows, and yeah, you can see 5.3%. Wellington City has fallen over the last 3 months. So that is a significant drop, and quite clearly and dramatically visible in the Wellington City's graph there as well. If we just look at the gross actual Real Estate Institute house price index graphs themselves, similarly you can see over the last 3 months there, the blue line representing Wellington region, the orange line representing Wellington City, both have markedly declined over the last 3 months. It's quite visible in that trend there as well. Moving on now into new listings. How much new supply are we seeing coming to the market? So 490 new listings in June versus 483 a year ago, so barely different. 532 2 years ago. So we're seeing actually fewer new listings than we saw 2 years ago. So as a vendor, what you obviously want is fewer new listings coming to the market. That makes it easier for you to attract buyer attention to your listing. There are fewer new listings to compete with. So look, it's down compared to 2 years ago, about the same as a year ago. So this is not a bad story from a vendor's perspective, from a seller's perspective. When we compare the amount of new listings come to the market with what's normal in June, it's less than normal. So 522 is typically what we see in June, and 490 is less than that. So overall, this is not a bad story for sellers. If you look at the red line there, you can see, look, there are some seasonal ups and downs as we move through the years, but consistently in the last 3 years, we're operating in a normal kind of a range in terms of the amount of supply coming to the market, between 600 and 800 new listings a year. So this is not a bad story. I mean, it's not trending down from a seller's perspective. You'd prefer to see it trending down. It isn't, but it's not unusually high numbers of new listings. If anything, in June, it's slightly lower than normal. And again, if you compare it to the 12 months prior, you can see there that we're fairly stable in terms of new listing volumes coming to the market. So this is not where the market weakness is coming from. We're not seeing too many listings coming on. However, on the sales front, 520 sales in the month versus 580 a year ago. That's 10% down, and versus 501 2 years ago. So that's a small increase compared to 2 years ago. But again, you look at the trend. That's what I find is probably more instructive than anything else. That red line, you can see that since from the depths of the low points, we saw really low sales volumes sort of throughout 2022. Since then, we were seeing gradual, consistent, not dramatic increases, but consistent, gradual increases in sale volumes. Sort of 2025, we hit a plateau, but since then, it has been tailing off again. So we have been seeing an erosion of the number of sales taking place. So while we've been seeing relatively normal levels of new listings coming on, the sales that we've been seeing going out off the market have been coming back, and that has been what's been creating the weakness. That balance of new supply versus sales has been out of whack. Sales have not been keeping pace with the normal levels of new listings. So sales volumes definitely trending down recently. And compared to what's normal for June at 636, 520, which we saw just this past month, is significantly below what's normal. So 18% below what we normally see selling in the month of June. Again, when you look at this graph here, comparing the most recent month to, when you're looking at the number of sales compared to 12 months prior, you can see we were on a very significantly improving trend there, coming out of 2022 into 2023, 2024. Then from 2025, it's been heading downwards and to the right there. So that trend is clearly visible. That deteriorating trend clearly visible there. So number of sales has been weak. How long is it taking to sell? So a long time. Again, look at that red line. The trend is absolutely clearly visible. It's up and to the right. It's been taking longer and longer and progressively longer to sell property in Wellington. So most recently in June, 56 days compared to 54 a year ago, 49 2 years ago. So 4% more than a year ago, 14% more than 2 years ago. And compared to the June average of 41 days, 15 days longer than what we typically see in the month of June. So there's no question property is taking a long time to sell in Wellington. Inventory, a similar story, not quite as dramatic, but still that red line is moving up and to the right. We did see stability throughout kind of 2025 after a big increase in 2024, but since then we've seen a gradual increase, and so 18.2 weeks worth of supply in June versus 13.6 a year ago and 15 2 years ago. So significant increases in the amount of inventory compared to the last couple of years. And again, the trend, which is probably as instructive as anything, trend is gradually increasing over the last 6 to 8 months or so. And again, if you compare 18 or just over 18 weeks worth of supply with the very long-term average at 15 weeks, it's sort of 20% longer than that. But over the last 11 years or so, the average has been just under 11 weeks. So we are 68% more inventory at 18.2 weeks than we have typically seen over the last 11 years since I've been collecting this data at 10.8 weeks. So definitely, again, this is all consistent theme here. Pretty weak market for sellers recently. Trade me listings 3,038 as of a couple of days ago when I'm recording this versus 2,772, a 10% increase versus a year ago and an 11% increase compared to 2 years ago. Again, if you look at those blue bar charts, you can see that we've been coming away, significant reduction in gross listing volumes. That is simply seasonal. We've been entering winter, and that always tends to happen. But compared to a year ago, it's high. Compared to 2 years ago, it's high. So relative to where we are seasonally, we've got relatively a large amount of stock, and the red line again shows you that it has been increasing as we're heading into winter rather than decreasing. So that red line is at a higher point there, pretty much matching the highest point in it since when I started collecting this data. Earlier than that, back in 2013, 2014, we saw more listings still, but certainly for July, we have got more supply on the market than we've seen since before 2015. So all of these things are pointing to the same trends, and that is generally a weak market. To me, the timing is just too coincidental since the conflict started in March in the Middle East. So we were seeing general improvement in the market, and then that really undermined, I think, more buyer confidence than anything. And so that pullback by buyers has really had a big impact in the last few months. Across the whole country, but in particular, Wellington has suffered more than anything. So in summary, folks, values have been declining recently. Wellington City in particular is now 30% below the peak of late 2021. New listings are broadly stable, slightly below normal June levels, but broadly going sideways in terms of new listing volumes. Sale volumes, on the other hand, have been weakening, down 10% from last June. Selling times are long and have been increasing, 56 days in June versus an average of 41. Inventory is elevated, well above the norms that we've seen over the last 11 years or so. Trade me stock is high for this time of the year. We have seen seasonal reductions, but for a July, we've got more supply for a July than we've seen for over 11 years. So the message for sellers is that pricing and presentation remain absolutely critical in this market. 100% you can still sell, but pricing is key and presentation is also key. Message for buyers is you have it really, really good at the moment. You've got exceptional choice and fantastic negotiating power. Great value is on offer at the moment, so get in amongst it. Big thanks as always to Real Estate Institute and to realestate.co.nz for the raw data. Big thanks for you for checking this out. If you want individualised advice, happy to help. Please feel free to reach out. It's Adam here at Low & Co. Thanks for checking in and see you next time.